Hi everyone, welcome to Weekly Market Insights. I am your RV Raju Angadi Vishwanath, SEBi Registered Research Analyst. Come, let us have a sneak into the trade setups for Nifty, Bank Nifty, and the sectoral indices. How to plan your trades for the week as well as stocks of the week. Let us discuss which stocks we could buy or sell and where the markets are heading towards for the week. As discussed in the last week, we have discussed it that we have entered a bear grip in the Nifty. So thus Nifty has entered a bearish scenario. Last week only we discussed major shooting star and other candlestick patterns were formed. Now let us see a recap of how the last week paired, and then let's get into the levels and the trades and planning for the week. Okay, let's get into the Nifty. Nifty was down 1.87% with a bearish bell-toed candle on weekly patterns. Bank Nifty was down along with Fin Nifty 3 to 3.2%. PSU banks were the major hit. Basically, the rate sensitives, all of them are down 6% down on the PSU banks, around almost 4.87% on the PSC index. Reality, pharma, were metals were down around 2.8 to 3%. Mid cap index was also down 2.75%. All of them were forming the bearish engulfing pattern or evening star candle pattern or bearish bell-toed candle pattern on the weekly charts. So it hints a reversal and the uncertainty on the elections. Although global markets are bullish, we have a hangover of elections. The results are on June 4. Till then, the markets would be moving around here and there while the choppiness and a corrective pattern is getting formed. Even the energy index was down 3.65%. Auto, well, it was up 1.3%, and FMCG were the two. Auto and FMCG were the outliers in the index, which were on the upside, while media was down 4.25. Infra were also down. Auto, FMCG, and IT was flat, basically forming a inverted hammer. So that's how the major index is formed. What it is overall, still the trend has turned bearish. The strategy is to sell on rises for the week. The mantra for the week is to sell on rises. Now let's discuss how to plan your trades. What are the patterns which are getting formed as per the charts? Nifty, kind of a bearish head and shoulder pattern it is forming. The chart looks to be forming a bearish head and shoulder. So let's say once the pattern breaks down, we are headed further lower. A bearish head and shoulder pattern carry target 20,700. It's coming bearish head and shoulder pattern targets is what we are seeing here. The height of the pattern which we are considering, once we break 21,700 levels, 20,600 levels could be tested in the Nifty as the chart ends. So the pattern is getting formed. The first confirmation trend line has been broken. Any rises now would be sold in the Nifty. So how to trade? Basically 22,163 and 22,275 are the hurdles for the Nifty. So 22,150 to 250 major resistance levels or maximum levels 22,400 may not be crossed. So those are the levels which needs to be watched. Overall, once we break 21,950, clearly we are selling off, or I would take a chance on a selling around 22,160 to 22,220 levels. I would sell with 2,300 as a stop loss. Even the data hints that 22,200 and 22,000 some good healthy call rating is seen. So rises should be sold. Weekly chart also hints we are on a negative trajectory, entering a negative trajectory in the markets. Well, on the downside, second confirmation, 21,950 and 21,741 below. We are heading much lower and we are breaking. We could break the previous lows of 21,100 levels to touch 20,000. 880, 20,700 and 20,250 levels even could be visited in the Nifty. So that's the viewpoint on the Nifty. So let's do the bank nifty analysis perfectly following a channel. Bank nifty 1, 2, 3, 4. Almost 4 times we have hit a channel. Let me draw it for you again. So Bank Nifty is forming a channel pattern. Continuously, we are trading in that range. Basically, 47,300 below. Now we are going to get bearish in the banks. 47,300 below, 46,600 to 400 levels can be seen at least for the coming week. If it becomes weak, 47,300 and 47,000 below, Bank Nifty will get into a weaker trajectory, and on the upside now basically 47,700, 47,900 and 48,100 to 250 levels becomes a resistance. So on a note, 48,400 is a positional view which has to be crossed for a fresh highs. So now 47,700 and 47,900 becomes a resistance. In a better case scenario, 48,100 would be revisited before the next leg of crash. Else, 47,300 below, the multiple visit of the channel support, if broken, we are heading clearly lower on the banks for around 700, 800 points. So watch out the level and act accordingly. Fin Nifty again 21,000 has held on. The important support trend line for breakdown is coming for a target of 19,800 levels. So once we break the trend line of 20,900 levels, 19,800 is on the cards. So the last week's low becomes very much important. 21,000 to 20,950 broken in the Fin Nifty. We are heading clearly lower on the downside. So the major indices we have covered. Financials will get weak. The major Bajaj Finance and Bajaj Finserv are showing a downward trajectory. What about the mid cap index? 11,040 becomes a major resistance for the mid cap. 11,040 to 75 levels are the major resistance levels for the mid cap, and once we break below 10,800, mid cap nifty is going to crash towards 10,550. So 10,800 is a major resistance. Support zone, sorry, 10,800 broken, 780 breaks, mid-cap index, the 5-wave decline has been completed. We are seeing a mere pullback in the form of ABC corrective advance. Here we are seeing a clear 5-wave decline in the mid-cap index in a shorter degree. So the pullback in the next week would be an ideal opportunity for either a C wave or even we can call it as wave 3 correction, whichever way scenario it looks to be on a bearish note. So the pullback would be the ideal opportunity to sell mid caps. So we are seeing a impulse 5-wave decline is what we have clearly seeing on the charts on a 45-minute time frame. Now the corrective advance, once it finishes and it breaks the level of 10,786, we are headed. First target, price target is 10,600. So mid cap Nifty, clearly the ideal way is to sell prices. $10,990, 11,040 becomes a resistance. Below 10,840, 10,780, we are heading clearly lower. The range has been defined. Trade accordingly. The pullback is the ideal opportunity to sell the mid cap. Sensex. Quick recap. Sensex also looks bearish as per the Nifty, and once the trend line is broken in the Sensex, 72,000 breaks, 71,700 and lower level are on the cards. Clearly 69,800 is the target what we are watching in the Sensex. But in until 73,500 is crossed, the bearish candle which we have formed in the last week, the highs of last week 73,500 open high are same. So the bearish bell told that would be the ideal stop loss. The rises would be a great opportunity to sell. We have covered most of the indices trades, how to plan the weekly trades for the week. Overall, the trend has been defined and the index trades what can be taken as defined. Before getting into the stocks of the week, if you like the video, do subscribe to our YouTube channel Traderz Hut. We are soon starting a live trading room as well. If you would like our video, follow us for the regular updates on the Twitter handle and the Facebook handle, as the description it is given below. And also we have given the advisory, as we are SEBi registered, link of our advisory services on the real-time updates of research and calls, as well as live trading room and the options workshop. If you'd like to learn options trading, please do join us on the link below. That's a brief about us. Let's get back into the stocks of the week. Okay, great. Stock specifically, we are bearish on TCS. 4,050 to 70, major resistance for the TCS. Once we break below the last week's low, 3,840 to 850, we are heading much lower in the TCS, or any rises around 3,950 to 4,000, start selling the stock. And once 3,000 820 and 800 levels have been broken. TCS heading much lower towards 3200, which is our positional target, as the stock looks to be completed a larger degree impulse. A positional view for TCS looks to be on a clear bearish note. We see the wave 3 has been completed in the TCS of a larger degree, kind of a super cycle degree. So the correction would drag the stock towards 3000 levels at least in the coming days to weeks ahead. So that's purely based on the larger degree Elliott wave counts for the TCS. I'm going to do it in a separate way. So TCS is bearish. Reliance Industries looks to be bullish. Why so? For a short term this week, I would see Reliance to be on a bullish tone. It is in the form of a channel. We are near a major support. What is the support? 2770 to 760. Major support 2760 to 780 levels. Until that holds, one can buy the dips. And on the middle end of the channel, 2875 and 2960 are the short-term targets, but my positional target stands around 3100 to 200 levels, as we are forming a flag kind of a pattern in the Reliance Industries. So that's the bullish note on the view on the Reliance Industries. Marico FMCG, well, we are bullish on. Marico looks good on the charts. 575 to 570 to 580 is a good accumulation zone with 560 as a stop loss. Marico looks good on the charts. So accumulate Marico for 650 for the overall March month, we can say 650 plus levels. Exide Industries looking good. Still the consolidation is happening. Stock seems to be on a good note. So stock can hit 540, 560 levels. 440 to 430 to 450 would be a good support zone for the Exide. The consolidation may get over and the wave 5 can start towards 600 zones. In fact, the momentum buy is Astral Limited, which has given a clear all-time high breakout. So until we hold 2060 and 2100 levels, stock is a buy for targets of 2300 plus zones. The Astral looks good on the charts. Hindustan Unilever, well, the pole pattern is one of the favorite patterns which I like. Hindustan Unilever is until 2300 holds, 280 to 300 holds, so we can buy Hindustan Unilever. In fact, 2298 as a stop. In fact, 2320 only could be the good stop, and once we cross 2385, the stock can head towards 2440 and 2480 levels. So we are having a bullish tone on the Hindustan Unilever. 2300 and 325 would be the good support zone. So 2325 only I would take it as aggressive stop loss and take the trade for 2385, about 2440, 435 and 2485 as the targets. So these are few stocks which looks great on the charts. There are few of them. Even Bajaj Finserv is what we like in selling, as it is in the form of a bear wave E in larger degree, so that has to be revisited around 1450 to 1425 levels to complete the wave E. Once the wave E is complete, we can head towards the fresh high. So the larger degree correction is due. Bajaj Finserv, the wave counts, it's in a coil kind of a pattern. HDFC Bank could be the culprit. Looks to be on a bearish note. The stock can correct in a good healthy way, as the stock looks to clearly make 1280, 1250 levels on the downside. The stock has broken the trend line, and 1350, 1360 is the first target for the HDFC Bank. So on a cautious note, HDFC Bank looks to be on a clear bearish trend is what it seems in a larger degree also. So that's it on the weekly market insights. I am your RV. Disclaimer in the sense which I would like to add, stock market investments are subject to market risks. Please read the related documents carefully before trading or investing. Do consult your personal financial advisor and do your own risk profiling analysis. Have a happy and prosperous trading week ahead. See you all next week again with the weekly market insights. Signing off for now, your RV.